Hey everybody, so this is the weekend overview video, and I just wanted to let you guys know I've been making a ton of videos lately, and I know it kind of gets disorganized. So I did create this weekend overview video playlist so you guys can easily find this video amongst my 100 plus videos. So going right into it, I just want to cover some basic news. So, right now, we have this article. It says Fed Daily is prepared to back another 0.75 percentage point rate hike. So, over the coming days, we're definitely going to see more Fed speakers talk about kind of where they position themselves with the interest rate hikes. But right now, Fed Daily is saying she's all in on 0.75 rate hikes. Now, we did see some interesting news on crypto. So, basically, FTX is helping out all of these other brokerages. So, Mr. Bankman Fried crypto exchange FTX is in talks to acquire a stake in BlockFi, which is a crypto lender that FTX gave a 250 million credit line to this week. And they also gave uh, crypto broker Voyager Digital a loan as well. And this is also his other company that gave him this loan. So Alameda Research. So right here it says Alameda said it extended two credit lines, one for 200 million in cash and stablecoins, and another for 15,000 bitcoins to Voyager. Now Voyager is also having some of their own problems here, other than Bitcoin just tanking. So Voyager said Three Arrows owed it 666 million. Now I do like that number right there, 666. And they're considering issuing a notice of default. So, they're having trouble getting this money, and on top of Bitcoin falling, now they're finally getting this loan from Alameda Research. So, things don't look terrible for these companies, but I mean, FTX is basically bailing out these smaller guys. And then we did have some news on Thursday that the Biden administration was going to meet with some of these oil executives, but honestly, nothing really happened. So it says right here both sides acknowledge there are few, if any, easy short term solutions available, industry executives added. So a one whopping big nothing. And going into economic news for next week, I would say the biggest one happens on Wednesday, June 29th. Mark this on your calendars. So, right in the morning, 8:30 a.m. Eastern Standard Time. This is even before the market opens. We are going to get the final GDP print for Q1. Now, let me just talk about GDP real quick. So, right here, we have these P's, and P stands for preliminary. So every month on Thursday, the last Thursday of the month, we get these preliminary GDP prints. Now, on the last month of the quarter, on the last Wednesday of that month, we get the final GDP print. So we get two preliminaries and then the final. So as you guys can see here, we had the preliminary in April. It wasn't that good. It was negative 1.4. We had the preliminary in May. It also wasn't that good. It was negative 1.5. So now we're forecasting negative 1.5 for June 29th, and that is going to be the final print. Now, just to give you an idea, how accurate are these preliminaries? Well, I can go back here on February. In February, we had this preliminary print of 7%. And then we forecasted 7.1, we got 6.9. So, it's pretty darn close. Now let's go back here in November. In November, we got a 2.1 print. So we were forecasting 2.1 and we got 2.3. So, there aren't these crazy differences between the second preliminary and the actual print. So just to prove that point again, here we got 6.6. We were expecting 6.6 and we got 6.7. So I think it's reasonable to assume that we're going to get something very close to negative 1.5% in GDP. So what does this actually mean? So a lot of people basically say, hey, you know what? 2 quarters of negative GDP is a great indicator of a recession. So essentially, we are getting Q1 GDP that is coming in negative. Now, GDP numbers are always kind of backwards looking. So, right now we're finishing up Q2 and we're just getting Q1 numbers. So by the end of Q3, we're going to get Q2 numbers. So that is going to be on September. So what I can do here is I can go on the Discord and I can kind of look for that information. I have it posted here, so let me just find that real quick for you guys. Just give me one quick second here. All right, so right here, I have the GDP numbers. So, or the dates on when we're going to get these numbers. So on June 29th, we get this final. And then for the Q2 preliminary, that's going to come out on July 28th. So this is going to be the first GDP print that we're going to get for Q2. And it's going to be the preliminary. And this could be a very important number because if it comes in negative again, we are going to see some massive headlines just talking about recession all day long. And then that second Q2 preliminary print comes on August 25th. And the final Q2 print is going to be on September 28th. That is going to be a big, big day. That's essentially going to be the day where we kind of figure out, are we in a recession or not? And if it comes in negative, you bet your ass that we are going to see recession talk everywhere. You probably cannot avoid it. So definitely mark these dates on your calendar. Now, I want to go straight into the technicals. And there's a lot of interesting things in the technicals I want to talk about. So we've just been seeing so much uncertainty. There's literally gaps in every single chart. So we're just going to start with Apple. And to really see these gaps, I mean, you could go on the yearly chart, which is the 1 day, but we could go on a smaller time frame and we could really start seeing these gaps here. So I am on this 1 month time frame, and you can kind of see right here that we left all sorts of gaps. So we left these gaps to the downside that are unfilled. So this gap to the downside is like 132 to 133.32. So what that's saying is, we could come down and retest these levels. That's totally an option that could happen. And look, we also left another gap. If you look right here, this gap is going from 138.62 to 139.74. Now we do have this top gap right here that we've never actually filled. So this gap can fill at 142.58. And this is kind of where things really get a little bit hairy. Are we going to rally further? Or do we just close this gap and then we fade from there? But right now, I do get a feeling that this does have a little bit more strength in it. We could rally a little bit more. And do we just close this gap or do we break through? Now, I do want to note that, we have kind of been in this channel right here. And, we have these moments where we peak out. But the last time we tried, we rejected pretty hard. So, can we just have this massive rally that takes us to like 146 or something, and then we break down again? Could that happen? It entirely could happen. And that would mean that we're building in another lower low, or another lower high is what I mean to say. So right now on the yearly chart, we are above this 20-day moving average at 141.37. So that's kind of the things that I'm looking at. I'm really looking at this gap fill right here, and if we're going to retest this trend line right there. And then, when that does happen, we'll revisit it. Technicals is all about revisiting things and changing your thesis. But right now, That's kind of what I'm thinking right there. So with Microsoft is just as interesting, but there's also another complexity here. So we have this 50-day moving average. And if we look at the 50-day moving average, it's 267.45. We are ever so slightly above that. And in the after hours, we're about like 50, like whatever that is. That's like 60 cents or whatever. 66 cents. So we're 66 cents above in the after hours. So right now, I'm wondering, are we going to have a double top right here, right around 274.83? And then we could possibly reject, or are we going to rally further? But the one thing that I do want to look is on the lower time frame. So here we left this very clear gap. This is unfilled. So this unfilled gap goes to 259.38 to 261.53. So that's definitely one thing I do want to pay attention to. And just look at the depth of this move. I mean, this is a pretty strong move. Let's just look at the Bollinger Bands here real quick. So yeah, the top of this Bollinger Band will actually give us a higher high. But, I don't really feel like that could, maybe that could happen. Maybe I should be more optimistic. Maybe that could happen. But I think a more likely scenario would be a double top and then a fade. But we'll see. I mean, the one thing we do want to pay attention to is this trend line that we're building right now. If we do come back and retest this, we could fill that gap, break slightly underneath this trend line, and then maybe we could go up and rally again. Who knows? But that's Microsoft for you. Now, Google is pretty darn interesting because on July 15th, mark this on your calendars, that is the stock split. So of course, it would make perfect sense for Google to be a little bit more stronger than everything else in the market, just because we had that stock split going on. So let's just look at a smaller time frame here. So we're leaving gaps on Google. As you can see, the lower gap right here goes from 2,173 to 2,186. Now there's also this gap right here that goes from 2,263 to 2,271. So we're leaving these small gaps here. And if I'm just looking right here, there is this potential for a double top to occur. And this could potentially occur at 2,379. So who knows? Maybe we just cool down a little bit. We have this double top, we cool down, and then we go up for another rally closer to the actual stock split. So if I'm just looking here and I'm thinking, well, where can we actually go to before we meet serious resistance? And I'm looking at this level right at 2,491. And if I zoom out, you can kind of see why it's serious resistance. We have this area that it bounced off of, this area that it bounced off of, and that area that it bounced off of. So this was prior support. And then you can see when we broke it, we just had these knives down. So to me, this could be a strong area of resistance. And, maybe this is as high as we get for the stock split action. And, if we do manage to break above this, gosh, it's like I would think maybe like 2,624 would be the next area. And, if we go slightly above that, then of course we run into the 200-day moving average. And, that's going to be strong resistance. So now going into Tesla. So a while ago, I did talk about, well, not a while ago, it was like a week ago. I talked about Tesla and how we basically hit the bottom and we're forming this potential W pattern. So where do I kind of see Tesla building out a potential resistance? Probably right here at 770.46-ish. And if I go on a smaller time frame here, there's this massive gap on Tesla that you got to watch out for. It's 653.61 to 673.58. So yeah, we got this massive gap here. And, we might even be able to draw a double top here. So just watch out in the shorter term. Maybe this could potentially rally a little bit more, but I do think that there is some great downside risk here. Just seeing that we left this gap open. Now, Amazon. So Amazon's pretty interesting. We had this massive W that we're building out, and we still have this gap that we never really closed. So, I'm wondering if Amazon does manage to pull out a good earnings report, can we go and fill that gap? That could entirely be possible, but is that just going to be a fake out? Is it just going to be a fake out? Do they just give some good guidance and then people are like, oh, yay. And then, we rally, we fill this gap, and then we just sell off because the actual earnings were crap. So who knows? But the one thing I do want to point out is we have gaps in this chart as well. Or maybe not. Maybe we don't have gaps. So I can see right here, we had this gap right there. If you look right here, we basically filled that gap. I mean, it's barely unfilled, but I would essentially say that this gap was filled. So you know what? I guess we don't have gaps on Amazon. So who knows? Where can this go? And you know what? I lied again. We do have a gap on Amazon, but it's all the way back here. And we actually just closed that gap right there. So as you guys can see, we closed this gap and we rallied a little bit above it. So this kind of makes me wonder, was this just a quick gap fill? And then, we just did a little bit above that. And are we going to fade after this? So that's Amazon for you guys. Now, ARK. ARK is very interesting. And I know I'm saying this is very interesting for almost every single stock, but, it truly is interesting to me. So we're going to go on this lower time frame on ARK, and we are leaving gaps, as you guys can see. So right here, we had this run up, and then you guys can see that we had this massive day right here where we literally went from 39.37 to 41.95. Now that's a pretty big increase for ARK, but we do have this gap to the downside at right around 39. So we could come down to fill that again. And let's just kind of look at the trend line right here. So yeah, in my opinion, this is some pretty strong strength on ARK, but I do believe it could easily be faded because ARK is a favorite for people to fade. Now, maybe we could build out a potential double top right here. And that'll come in right around 46.93. And let me just look at the yearly chart again. Oh, that's interesting. So we closed slightly above this 50-day moving average at 45.44. Now, sometimes you see this, like we saw this right here, where we closed a little bit above the 50-day moving average, and then we fade it back down. We managed to get back above it, and then we totally had this massive sell-off. So are we going to see something similar? What you want to see is sustained price action above the 50, not just a couple days, which is basically what happened here. Just a few days, something like a double top right there and then a massive fade. So do be careful. Be very, very careful. You know what? Let's just look at one more thing. Let's throw in the Bollinger Bands. So the top of this Bollinger Band is right at 47.98. So if at any point we do start peeking out of these Bollinger Bands, that's going to be like the sure sign that, this is getting overextended. So right now it's very close to being overextended. And, this might not be a bad opportunity for the downside. Now SPY, I got to go on the shorter time frame to really show you guys these gaps. And there's a lot of them. So first gap to note, this big one, 368-ish is kind of where the bottom of this gap is. So I actually decided to go on a shorter time frame so that you guys can really see this better. So we have, actually it goes lower than that. Right about 367. 367 is the bottom of this gap if we want to fully close it. Oops, I've asked. And then right here we have 371.77 is kind of where this range of this gap is. So 377 to 371.77. So it's a pretty big gap here. Now we have the second gap that we made. So it's 378.58 to 381.31. And if we're just looking here, so now we're going to go over to this 1 month time frame. So right here, we filled this gap right here, as you guys can see. And we made it slightly over. So, was this just a gap fill and now we're going to fade? Or are we going to make that next leg up? And are we going to fill this gap right here at 401.39? So that's the big question. We have about 2.5% to the upside. But if we go down and we want to fill this gap right there, I mean, that's quite a bit. That's over, let's see, that's over 5%. That's like 5.5%. No, that's like 6% there. Yeah, that's about 6%. So we have 2.5% to the upside and 6% to the downside. So I'm just looking at risk reward here, and if I truly believe that 400 is like the top, then yeah, the risk to reward doesn't look too good. Now let's see if there's anything else I can see here. That 20-day moving average is also right there at 392.67. This could act as resistance. I just want to point that out. Now let's look at the Qs. So I'm going to go on that 5-day time frame again. So here we're also leaving gaps. So right here, the bottom of this gap is 275.73. And the top is 278.58. Now if I'm looking at this gap right here, we got 283 or 285.31 and 287.50. Now I'm going to go on this 1 month time frame here. And you guys can see that we're basically hitting this gap range right here. So are we going to go up and fill it? Because if we do go up and fill it, that's going to be 298.62. Actually, it's going to be a little bit higher than that. It's going to be like 299.33-ish. So yeah, right around 299-ish is kind of filling this gap right here. Now, I do want to note, we are getting really close to this 50-day moving average at 304.66. So there is a potential chance that we could get up to this. And then do we break above it and do a double top? Or do we just fade right there? Or do we not even make it to fill this gap? So a lot of things to think about here. Now IWM. So if I'm looking at IWM, let's go on a shorter time frame here. We're leaving this gap right here. So we did have this gap. But as you can see, we filled it right there. So when we went down right there, we filled this gap right there. So the gap that we're really focusing on right here is going to be 170.16 to 170.89. Actually, it could fall a little bit lower than that. That would be 169.95 to 170.89. Sorry about that. Now, if I go on this 1 month time frame, I can see that there's this gap to the upside that we could fill. This will take us to 178.38. So that's about that's about like, what is that? That's like 2%. Yeah, it's about 2%. So that's kind of what I see to the upside. If we do get above this gap, then we could potentially start going into this gap zone right here, which is 181.65 to 183.72-ish. But ultimately, this chart doesn't look too good. And let's just go into 1 year time frame. On the 1 year time frame, we do have this 20-day moving average at 178.08 that could act as resistance. The 50-day is also right here at 182.25. This could also act as resistance. So there's a lot of areas where we could see resistance. And essentially, this is probably the big gap fill. If we're just to fill all these gaps to the upside, it's going to be that 183.72. Now DIA, which is following the Dow Jones. Now this chart is also pretty darn interesting because we have gaps all over the place. So right here, the first gap is going to be right around 299.65. That's the lower range. Higher range is going to be 302.56. And we also have this gap at 306.80 is the lower range, and 309.26 is the higher range of that. So now if I go on a higher time frame here, you can see that we filled this gap right there. And now we're kind of entering this area, this zone right here. So the top of this zone, which is going to be the bottom of this gap, is going to be at 318.70. And if we want to fully close this gap right there, that's going to be 322.94. And if we were to make it this high and then we reject, then essentially that would look like a lower high. But there's always that chance where we could just rally all the way up to here, and then maybe we build something like a double top and then we fade again. Who knows? But right now that's the situation. On the 1 year time frame, we do have this 50-day moving average that is at 324.23, and we have this 20-day moving average at 317.19, and both of these can act as resistance. Now we have the VIX, and I see a few different scenarios here on the VIX. So right now we actually bounced off the 100-day moving average at 26.93. So that's that yellow line. You can see a very clear bounce off that right there. But we also closed below this 50-day moving average at 28.22, and we also lost this 29.50 zone right here. So as you guys can see, I had this trend line right here that was acting as resistance, but now you guys can see that this could be potentially acting as support. But, as long as there's those gaps to the upside on SPY, I do think it's quite possible that VIX could continue to fade to this bottom trend line right here. So this would be seeing VIX around 25. So like 25.50, 25.60-ish if we do fade. And there's also this 200-day moving average right here at 23.62 on the VIX. There's also this bottom trend line right here, and this could take us to like 21.50-ish on the VIX. So VIX has plenty of areas of support. This line right here, this 200-day moving average, this line right here, and the 100-day moving average if we decide to bounce off of it. Now, UVXY. There is one thing I want to point out on UVXY. So here on the VIX, we fell 6.27%. Here on UVXY, we fell 2.7%. So what this is telling me is that people are still holding on to UVXY because they are foreseeing volatility in the near future. So, I did talk about that GDP print. Who knows how people are going to react to it? I mean, it's already pretty darn clear, just from the preliminaries that GDP is going to come in negative this quarter, or the quarter for Q1. So maybe it's already priced in and, maybe people don't care about it. Or maybe, people already knew about it, but they're still going to rehash it and it's going to be a big deal and we're going to sell off. Who knows? So right now, I do see that discrepancy with UVXY and VIX. That UVXY is basically falling at a lower percentage. So if we're just looking at the gaps here, UVXY does have a gap to the upside, which would be at 14.77. It also has a gap to the downside at 13.66. And that would in my opinion, be a not so bad area to probably start accumulating a little bit because keep in mind, next month is going to be a new quarter. We're going to have bank earnings. We're always going to get that Netflix earnings, and who knows what's going to happen with that. And then in the back half of the month, we're going to get all that big cap tech earnings. And then over in early August, that's when we get all that retail information. So, the market is going to be very, very, very crazy next month, not to mention the CPI print as well. So that concludes my video, and I hope you guys really enjoyed it. And one last thing that I almost forgot to say, I will have those risk ranges down below for you guys to view at your convenience. So thank you very much, and I hope you have a great day.